Hi, I'm Jim Rickards. I'm a financial author, investment advisor, and lawyer. I've been in capital markets for over 30 years. I'm here to talk to you today about the coming financial crisis, something I talk about in my new book. The crisis is coming, you know it's there, but the question I'm asked most frequently is, well, how will I know when it's coming? How do I know what to look for? What are the signs? And there actually are signs along the way to tell us the crisis is getting near. The first one is a rise in the price of gold. Basically, this is a very good indicator of inflation. Sort of like putting a thermometer in a patient's mouth. When you see the fever is too high, you know the patient's sick. Rise in the price of gold is best understood as a collapse of the dollar. Gold and the dollar are just sort of a seesaw. If the dollar goes down, gold goes up, and vice versa. So a rise in the price of gold is the beginning of the collapse of the dollar. That's a very definite sign. Along with that, sign number two, gold acquisition by central banks. Now, this has been going on for years. For decades, central banks were sellers of gold. Recently, they've become buyers of gold, especially China. China's buying thousands of tons, a very large percentage of all the official gold in the world. They're not honest about it. They don't tell us what they're doing, but we have enough information to know that they've been buying thousands of tons. They're going to announce that sooner or later. That'll be a shock, but we already know that's coming. So that gold acquisition is a second sign. That may accelerate. You may see other central banks joining in. Sign number three is IMF governance reforms. Of course, IMF is the International Monetary Fund. You've all heard about the BRICS. That's Brazil, Russia, India, China, South Africa. They're setting up their own alternative IMF. They're creating their own development banks and their own multilateral lending funds. Why are they doing that? Well, the answer is they want more votes at the IMF. They don't actually want those institutions. They want more votes at the IMF to be more on a par with the United States. They're not getting them so far. The U.S. is standing in the way, so they're creating their own institutions. But if the IMF actually votes these reforms in and gives Russia and China and India, Brazil and South Africa a larger voice at the IMF, that'll be another shift away from the dollar. The next one is the failure of regulatory reform. You know, in 2008, what did we hear about? Too big to fail, too big to fail. All these banks are too big to fail. Well, guess what? Since then, the biggest banks in the United States are bigger. They have a larger percentage of all the banking assets, and their derivatives books are much bigger. So the whole system that was corrupt and dangerous in 2008 is even worse today. The regulatory reforms have failed, so watch out for that. System crashes. By this, I don't mean the stock market crashing. I mean the stock market actually closing because of technical problems. August 22nd, 2013, the NASDAQ was closed for half a day. Has anyone explained why? Was it a Russian attack bug? There's good reason to believe it was. So night trading was another one. We're going to see more and more of those system crashes. And when the stock markets are closed, you can't sell your stocks. Your liquid equity becomes private equity. You can't get your money. The end of quantitative easing is another slowdown, and a Chinese collapse because of the credit bubble there. So these are the signs. This crisis is coming. We just talked about what to look for. This is awful for American seniors because all of the roads lead to inflation, maybe even hyperinflation. It's the only way out. When we have debt that we can't pay and the economy is not growing fast enough to cover the debt, you inflate it away. There are winners and losers in inflation, believe it or not. The losers tend to be American seniors, people with insurance policies, annuities, money in the bank, retirement savings. Those are all fixed dollar amounts. If the dollar goes down because of inflation, you lose. So I think American seniors are the most vulnerable to this. As far as hyperinflation is concerned, you know, my definition of it is 10% a year or more for a couple of years in a row. We've seen hyperinflation around the world. We've seen it throughout history. The important thing to remember about hyperinflation, we just talked about the losers. We know who the losers are. They're people with pensions, insurance, annuities, and fixed income. But there are a lot of winners. The winners are people with precious metals, energy assets, land, agriculture, fine arts. So inflation doesn't affect everyone equally. There are winners and losers. The idea is to be on the winning side and to get some of those hard assets. The most important thing of all is, what is the government going to do when the crisis hits? We know what they did the last time. They printed money. They printed trillions of dollars and did tens of trillions of dollars of swaps and guarantees. The next time, the crisis is going to be bigger than the Fed. They're not going to be able to print their way out of it. What are they going to do? They're going to close the doors, as was done many times in the past. Do you know that in 1914, the Secretary of the Treasury ordered the New York Stock Exchange closed for 5 months? I look for things like that again. They're going to shut the doors. Things that look like money today, you're going to find out you can't get your money. You can't sell your stocks. The ATMs will be reprogrammed, so you only get a couple $100s a day for groceries and gasoline, so they're going to shut the doors. You need to prepare for that today. So this crisis is coming. We explained the 7 signs. We explained how it plays out. The key thing is to get ready today with some cash, some gold, some hard assets, and some investments in things like land.